Good morning, everybody. It is Thursday, February 6th, and we're going to start our prep for today for the ES. The pain trade is still alive with the wide, choppy swings this week. Were you ready for the uptrend yesterday? Did you know that there was a $7 billion bid sitting in the market? So we'll dive into those and get ready for the rest of the week here. But first, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So when we look at what happened yesterday, and a little bit of difference today. Yesterday, we started underneath our line in the sand, and today we're going to start over. And that tells us that our market makers are in compression mode ahead of non-farm payrolls tomorrow and Amazon earnings today after the bell. So we will look for smaller rotations in the market. We've had these big rotations for that pain trade, and now we'll look for smaller rotations as long as we stay over that line in the sand. And with those big catalysts coming, we can watch for the same kind of price action we look for as we come into those. So yesterday, as we closed on Tuesday, we had a down move as people buy insurance ahead of the data. And then when the data comes out, we get the bigger up move when they are positioned with too much insurance. And so we see this at 9:30 in the morning. We are moderately insured, about where it needs to be. The storm could be good or bad. But as the time went on and at 9:45 and 10 o'clock, we really started to see this spike up where we had too much insurance in the market. So now we know that the downside is about finished and we can start looking for those insurance policies to get sold back because it puts a floor in the market. And that's all that we saw play out yesterday is as soon as that data came out, we flushed and then a huge move up as we expected because there was too much insurance, meaning that no matter what the data is going to be, we're not going to go lower. People are protected. And today, we'll look for that same thing to happen later on in the afternoon with Amazon earnings and non-farm payroll tomorrow. From our flow standpoint, our systematics, we only have about a $250 million bid here between 60.90 and 60.60. So that's basically non-existent. We really don't get anything until we get the $3 billion sell coming in at 60.30 or 61.22. And then beyond that, where we turn into a $10 billion or $11 billion offer on the outsides, that's going to help keep us very contained today. And so our systematics are done buying for the week, and now we will watch where these risks lie over the next couple of days. And we need to keep an eye ahead of the insurance buying ahead of jobless claims here in the next hour. Again, most traders, though, are going to be concerned with NFP tomorrow. So we're getting this down move as people are starting to buy insurance, but we're not seeing big enough numbers come in yet, like we saw yesterday for trade balances, or we're likely going to see for Amazon earnings and non-farm payrolls tomorrow. And so back to the questions we started with at the beginning of this video. We mentioned earlier this week we would see wider swings, and that's the pain trade. And that's still playing out as we're getting these 50-point moves in the market back and forth. And we saw our insurance price action yesterday, and our students use this to time the market well. The other thing that we looked at yesterday that our students were paying attention to is we had a $7 billion bid as long as the market stayed within about a 50-point range uh, of our bands. And that was key because that tells us with the over insurance, it's very likely to be a strong upside move. We had too much support coming in the market. And if we look ahead, today we know there's not going to be much. Tomorrow, maybe a moderate amount. But really, if we look next week on Tuesday is the big day where we're going to see again another $10 billion bid come into the market. And if we can see this, I guarantee you that Citadel and Susquehanna and other market making firms are able to see this. So they plan ahead of time because, unlike retail traders that are focused on trades that last a couple of hours or some down to a couple of minutes, they're making a plan for how they're going to run their business, the same way that any professional would look at their business. And if they can identify a day when there's going to be 13 billion customers coming in, they would stock their shelves and plan accordingly. That's what we're going to see as we do a look ahead to next Tuesday. So flows today are less supportive than yesterday. Yesterday got us the move to make the markup, and now we can watch our line in the sand to tell us if that's going to stay compressed until uh, next Tuesday, or really for NFP tomorrow is where we'll want to pay the closest attention. And so we use this information to get ahead of the curve for not just non-farm payrolls, but to make plans for the week so we identify where the best odds are in the market. If you want to level up your game with access to proprietary tools to understand the money coming in and out of the market, then check out our courses starting next month. Have a great day and be sure to watch your risk.